Financing rates soaring since the Fed started raising rates in March. Edmunds reports the average APR for used vehicles is 10.3%. That's up from 9% in March. New vehicles come in at 6.3%. That's up from 5.2% in March. Our next guest expects auto dealers to hold the line on prices, at least for now. Mark Fields is a former CEO of Ford and Hertz. He's now a CNBC contributor. Mark, great to see you again.
Hi, Melissa.
How much pressure are these dealers facing at this point with the cost of owning a car per month just skyrocketing here?
Well, you're still seeing a relatively strong market. I think when you tally up the results in October, you're going to see the industry up versus last year and up versus October. And part of that has to do with the pent-up demand that you're seeing out there. But, the average selling prices are still at near record levels, although they're starting to come down. But, listen, when you have interest rates that are going up to the extent that you just showed on your screen there, I mean, in some cases, a car payment is approaching a rent payment in some parts of the country. And so I think you'll start to see a moderation in some demand falling off, maybe some more discounting as the inventory levels get back to other areas as we go in the months ahead. But right now, the dealers are fine. They're coming off a record 2 years. But I think they're prepared for tougher days, particularly going into 2023.
If you were still ahead of Ford, Mark, how would you view this time, and how would you view, the wind down of certain businesses, for instance, and sort of getting lean into a potential recession?
Well, I think what you're seeing the automakers doing is they are starting to tighten their belts. First off, we have to put into perspective, Melissa. In the last 3 or 4 downturns, the industry has always been in a situation where there's been high discounting, high levels of inventory. You don't have that now. You have very low levels of inventory by historical standards. They have to restock. But that being said, with these levels of interest rate, demand is going to fall off. So you're seeing automakers announce reductions in workforces. You saw that happen at Ford. You saw that happen in other automakers, Stellantis, that are offering buyouts for employees. You're seeing them tighten their belts, like Ford deciding, listen, the investment in Argo AI, which was for level 4 autonomy, they probably don't see a path to profitability. So they said, listen, we're going to make choices. Strategy is about choices as you see tough times going forward. But the balance sheets of these automakers are in great shape. So I think they'll fare much better than they have in any other downturns. Of course, that depends on how severe it's going to be.
Mark, it's Karen Feinerman. Thanks for being on. When you look at the industry and you think about the vast differential in valuation between a Tesla and between a GM and a Ford, how do you think about that? Do you think it's out of whack? And if so, from which sides?
Well, I do think by any measures, Tesla is valued very, very richly. But listen, investors are looking at that, and they're looking at the growth prospects of the company going forward. When they come out and say, on average and over time, they're going to grow at 50%, that's pretty compelling. But, clearly, if you look at the valuation metrics, it is overvalued. But that being said, Elon Musk, there's a lot of star power there. He paints a very interesting picture for the future. But at the same time, I think the established automakers are making a lot of inroads, particularly on electrification. And I think at some point, the market is going to give them credit for that. But for now, they have not. And I think the other thing they're waiting to give them credit for is, listen, they have all said they're going to have volume and manufacturing and pricing discipline through the next downturn. I think the market is going to wait to see if that happens. And if it does, then I think you're going to see some multiple expansion for the automakers, but not before that.
I'm going to ask you this question, Mark, because I've gotten some surprising answers when I've asked this question in the past of people who are closely tied, in the C-suite of various companies. But at this point in time, seeing that we are on the cusp of a recession, rising interest rates, would now be a good time to be a buyer of Ford?
Well, I think it's always a good time to be a buyer of Ford. Of course, I'm a little biased.
You gave me the answer that I thought you would.
But listen, I think, investors should look at this from a historical standpoint. And when you look at the multiples of companies like Ford and GM today, they're quite low, but they are very differently positioned for this downturn. And so I think if investors can look past the fact that we're going to have some demand destruction going on, the fact that the balance sheets are in very, very good shape, and the fact that both automakers and all automakers are being quite transparent with the marketplace in the actions they're taking now to prepare them for that from a cost standpoint. I think long term, listen, autos are an important part of the economic landscape across the world, and I always think it's good to be invested in this space.
I presume you own Ford. Do you own other automakers?
I only own Ford.
Okay. All right. Mark, always great to speak with you. Thank you.
All right. Thanks, Melissa. Mark
Fields. I asked that because I asked Bill Simon, would you rather Walmart or Target? And he said Target. So I'm like, well, you never know what you're going to get back. You just should always ask.
Well, and we've gotten some interesting answers out of Bill, maybe for the other guy. But in terms of Ford, again, what is that multiple that he mentioned? It's 7 times on each side. So, I mean, it's attractive.
Yes.
Yeah, when you look at the divergence between your traditional automakers and Tesla, as we mentioned before, and we've kind of had this conversation ad nauseum, you really start to look at those input costs. And with chips easing, you wonder, right now it's really, a battle of wills. Which one can raise prices higher and keep them there? And I think, you really need to look through at like the Greens Act and things of that nature that will kind of give us these incentives to continue to have the growth that all of these companies are banking on the EV space.